Hello dear traders, the US stock market could have maintained its rally if not for yesterday's collapse. On November 22nd, stock markets across the globe incurred considerable losses. So what happened and what should we expect in the near future? See our video review and find out the answers. The Dow Jones Industrial Average has been steadily declining throughout the week. As of November 22nd, its dynamic has not changed. Over the week, the index dropped by about 600 points, which is quite big. In the last video review, we pointed out that the Dow had no drivers for further growth. Now it's trading at around 35,600 points. Analysts highlight several reasons for the decline: the strengthening of the greenback and speculation over the possible key rate hike. The prospects of monetary policy tightening are weighing on the stock market. For this reason, the equity market is unlikely to resume a rally for some time. So the Dow is expected to trade in the range between 35,800 and 35,400 points in the short term. The S&P500 did not decline during the week. It even increased slightly, reaching a high of 4,740. On Monday, it dropped sharply to 4,680 due to Biden's decision to keep Jerome Powell as Fed's chair. His term is coming to an end, so investors were anticipating the announcement of a new candidate for this position. They were surprised by Biden's decision to renominate Jerome Powell for a second four-year term. Apart from that, the market sentiment worsened because of the aggravation of the epidemiological situation in Austria. The country imposed strict quarantine restrictions. Analysts are sure that the index may continue to fluctuate between 4,640 and 4,700. NASDAQ composite has also been growing over the week. However, yesterday it fell to 16,300 points following headwinds in the stock market. In general, after Joe Biden's speech today, the stock indices may regain momentum. The index may well win back some of the losses, heading for 16,600 points. Some market participants are betting on such a scenario. Nevertheless, one should take into account that there are now many economic and geopolitical factors that restrain growth. And now let's move on to a review of some stocks. But before that, let's sum up what's going on with the main stock indices. Yesterday, the stock market nosedived, failing to retain its upward momentum. Its rally was mainly facilitated by positive US retail sales data. Inflation concerns have again started to weigh on the market sentiment. For instance, in the UK, consumer prices have soared to the highest level in a decade. Investors became even more worried about the earlier tightening of monetary policy by the main central banks, so traders are now less willing to take risks. This is why they have decided to sell off some of their shares. The decline in the equity market affected the shares of transport companies, hotel chains, and cruise ship operators. The industrial, financial, and energy sectors also suffered losses. Foot Locker's stocks fell by 12%, despite the fact that a large retailer of sportswear and footwear posted an upbeat earnings report for the third quarter. In addition, shares of companies from the tourism industry as well as air carriers decreased as well. Airbnb shed 3.9%, Carnival Corporation dropped by 2.2%, American Airlines by 0.6%, and Delta Airlines declined by 1.1%. It seems that the stock market is now oversaturated. Therefore, it's extremely unlikely to resume an upward momentum. So please subscribe to our channel and stay up to date with the latest market news. You're also welcome to leave your comments down below. See you back soon.